Welcome back, everyone. This is our Gold Weekly Review. My name is Zitis, and this week's title is Stimulus Package in Focus. Gold's price moved higher since our last week report, yet traders may have remained cautioned due to the uncertainty prevailing on various matters, like the global economy, the US presidential elections, and the COVID-19 outbreak. Our research for this report will focus on the most important fundamental drivers for gold's price at the moment, while our technical analysis will also cover for gold's activity from a different aspect. We make a start with the US and the matters currently surrounding the political and economic stage in the country. Last week, gold's price rose on news of the restart on talks for a new stimulus package. Even though the package has not been decided upon until now, the fact that talks have restarted and the urge from Fed Chairman Jerome Powell to bring out more stimulus to save the economy seems to fascinate gold traders. Naturally, gold is considered an instrument to hedge economic risk, and this could be attributed to the upward movement gold's price has seen in the past week. We expect the matter to be a major driver for bullion's price, and we could even see gold moving abruptly if a decision is formed unexpectedly. On a final note, some analysts believe that the higher the stimulus package is in terms of money, the higher gold's price could move, and the opposite. This could be the initial reaction gold could form. Furthermore, we expect gold to be driven by headlines related to the US presidential elections and especially debates and polls. This week's debate has been cancelled according to various sources, but the election period has traditionally been very active and the financial markets tend to be very interested in all aspects of the matter. The events that currently stand out for gold traders to have in mind for the next days follow. On the 15th of October, we get the weekly initial jobless claims figure and the fully fed business index figure for October. On the 16th of October, we get from the US the retail sales and the industrial production figures for September, both very important indicators, and the combination of the two could prove very interesting. On the same day, we get the preliminary University of Michigan sentiment for October. The circumstances relating to the COVID-19 outbreak on a global scale are worsening according to the increasing numbers of infections and deaths. Top of the list is currently the US, yet most countries globally are seeing increased figures and measures are taken to control the spread. The effect on the economies around the world has not been fully realized yet, as the situation is still ongoing, yet countries like the UK are currently seeing unemployment rise, which could be taken as an incoming sign for what could follow in other economies like Europe or Latin America. Overall, the virus spread could be supporting gold's price, yet any announcement of an effective vaccine could help push gold's price significantly lower. We would advise caution on the specific matter as the speed of the headlines released could create significant gold price moving effects. Moving now to our technical analysis, this is gold's 4-hour chart. At the moment, gold continues to trade between our R1 1930 resistance level and our S1 1910 support level. Yesterday, gold constantly tested our R1 1930 resistance level but was unable to breach it. However, in case gold's price surpasses the R1, the next levels higher in our view could be the R2 1955 line, and on top of that the R3 1970 hurdle. Please note that the R3 level, the highest level for this report, was last seen back in September and has not been clearly breached since August. If the R3 1970 line is breached, it could confirm a strong bullish run for gold. The levels we have noted if gold comes under selling interest by traders is first the S1 1910, below is the S2 1890, and even lower is the S3 1875 level. Please note that the S3 1875 is the lowest level reached so far in October, making it a break or make point for a clear bearish momentum. On a monthly view, since the start of September, gold is moving in a sideways motion between our R3 1970 hurdle and the S3 1875 level, so overall we tend to maintain this movement as our personal opinion. That's the end of this report. We hope you enjoyed it as well as found it useful. From everyone here at IronFX and me, Zitis, wishes for solid trading.